Welcome to the Meta Business Podcast. The Metaverse and Web3 are bringing about the biggest revolution since the internet itself. With your hosts, Paul the Prophet Dawalibi and Jeff the Juice Cohen, we will be bringing you the latest Metaverse business news and insight into what it all means. The Meta Business Podcast starts now.
From the boardroom to the Metaverse, this is the Meta Business Podcast. I am Paul the Prophet Dawalibi. I'm joined today by my friend and co-host, Jeff the Juice Cohen. For those of you who are new here, welcome to the official podcast of the Metaverse. What we do is we cover the most pressing Metaverse stories and news of the week, but we look at all of it through a business and C-suite lens. We dissect, we analyze the business implications of everything happening in this incredible industry. For our regular listeners, thank you guys for tuning in every week. Thank you for leaving a 5-star rating and review on the podcast. If you haven't already, hit subscribe, leave a review, share the podcast with a friend or colleague. This is how we've grown. We really appreciate it. Jeff, how you doing this week?
I'm doing well. I'm doing a good week. I know we're both busy. Actually, we're both moving. I know.
We're both moving.
I don't want to dox you on the podcast, here, but we're both moving.
Your address
I bought
is.
a house, and Paul is also. Paul's move is bigger than is much further than mine. I'll leave it at that.
We are both moving, not into the Metaverse, so we can at least confirm that. Not yet.
Not yet.
But I have been thinking about it. You know, I will say, I was playing with Epic's like Unreal Engine today a little bit. I had a little bit of time in between calls, and I was toying with Unreal Engine 5 and their metahuman integration in Unreal Engine 5. So I'm thinking at some point we'll have to create metahumans and do this whole thing as Unreal Engine powered metahumans.
I agree with that. I was going to make the joke, and this is why you're so much more successful than me, because in between your calls, you go on Unreal Engine 5 and innovate. In between my calls, I go get a snack and try to play with my dog. So this is why we're not the same.
Well, I'm going to get you a metahuman avatar here, and we're going to do this at some point. You guys can look forward to that, because it is cool. I will say, I've been very bearish on Tim Sweeney, but I am thoroughly impressed with Unreal Engine 5. I think, for someone, I'm not a 3D designer, like it's not what I do for a living, obviously, but, tech savvy enough to go in and get a good feel for what this thing can do. And I was very, very impressed. Let's put it that way. So, just interesting anecdote. We often talk about things like gaming and stuff like that. So, let's start with a story, Jeff, that is sure to attract attention. I'm sure we're going to turn it into a very clickbaity headline for the podcast here. But the article here is from Seeking Alpha, and the headline says, Playboy and the Metaverse could imply significant stock undervaluation. So Playboy, it says PLBY. I guess PLBY Group is the group that owns Playboy. Obviously one of the most recognizable brands in the world. They recently launched a virtual Playboy mansion in the Metaverse. And what they're saying is, if management is successful in its efforts in this industry, in the gaming industry, Metaverse, whatever, net revenue could trend north. So not a whole ton of detail in this article. They're just saying, that the Metaverse and their expansion in China and India, I don't know why those are in the same sentence. They're two very different initiatives. But they're very bullish on their Metaverse play here for Playboy. We always try to start with kind of a fun, lighthearted story. What do you think of a virtual Playboy mansion in the Metaverse? Like,
I think it's super interesting. Obviously, I'm not familiar with Playboy stock, so I'm not going to try to get into the nuances of what this actually does for Playboy stock. And as you're going through it, so this is a Seeking Alpha article, which is a investor website where people will post, their stock ideas and their pitches. As you're scrolling through it here, for people who are watching on, video, it's pretty impressive. They actually have like a lot of detail. Like this isn't just some, clickbaity article. Like this is someone put together like a very detailed stock pitch. I don't think we're going to get into that because neither of us know the Playboy business model that well. But I think it's interesting. I mean, the porn industry, interestingly enough, has actually been very early to a lot of like technological trends. Like porn was one of the early kind of use cases of the internet. And
especially of high-speed broadband, things like that.
Yep.
Yeah.
So I don't think it's actually that crazy that, virtual illicit behavior could actually be a very early, use case for the metaverse. I don't. There's a lot of different ways you could take that in terms of what that means for society and how how that could be negative in many different ways. But there is a big market out there for this kind of thing. And so I think it's interesting that Playboy is kind of digging in and having a presence in the metaverse. We often joke that it seems like every business is at some point going to have their fingers in the metaverse. And obviously Playboy is not one of those businesses. So yeah.
It's obviously I agree with everything here, but like my take on this is a little bit different in the sense that aren't you surprised that Playboy was maybe the first mover here, right? Because Playboy traditionally has been kind of the laggard when it comes to new tech, right? They stuck with a magazine probably a lot longer than they should have. And there are definitely adult entertainment websites that are more forward thinking, tech savvy, innovate on the tech side. And at least I don't know about them, but I don't think I've heard of any efforts from those companies to do something, in existing metaverses or in their own or whatever, right? Like I have not heard any of the adult sites doing something in Decentraland or Sandbox. And I don't know if that's because existing metaverses have turned them down and maybe Playboy is a little bit of a safer, not so, hardcore brand, adult brand. But I'm surprised that it's Playboy sort of making the first move here.
It's a great point. I guess to be fair, and maybe as we're looking through this article, I wonder if this is something Playboy actually announced, or if it's this investor saying, "Hey, they should do this." Because you brought up a good point about content moderation. Like I do wonder, this isn't going in Roblox. I'm sure. I highly doubt Roblox would allow something like this on their platform. So it's probably going to have to go into one of maybe the more upstart metaverses, like even Epic. I don't know. Just is Fortnite going to put Playboy into Fortnite?
Probably not.
Maybe, but probably not. So you're probably looking at one of these more. It's a great move for an up and coming metaverse that we're always talking about. Hey, they don't have people there. There's no use case. Like something like the Sandbox or Decentraland. Maybe this becomes a little bit of their way to get a little more publicity and kind of like bring in that 18 to 35-year-old male, which frankly, sex sells. So I don't know.
I clicked through to this article from late last year, and it was, my just quick read of this article is it seems a lot of this is being driven by the new SPAC owners, right, of Playboy, because they used the SPAC to go public, and they did a sale of NFTs called Rabbitars, and every owner of these NFTs can belong to the Playboy Club. So if you're watching again, these are some of the NFTs. It looks ridiculous.
So they're really just throwing everything at the wall, I guess.
But, again, I'm impressed that Playboy is sort of the first mover here, that they're thinking about this before other adult brands, which have definitely shown a more tech savvy or more tech innovation. So good on Playboy. Maybe this is their chance to reinvent themselves, right? In some ways, the move to Web3 in the metaverse is allowing older, slower brands that may have fallen behind in Web2 to catch up or to even take leadership positions, because it's sort of a clean slate.
Yeah, and we've seen Web3 companies try to resurrect even like decidedly dead brands, right? Blockbuster, LimeWire, like a couple of, and maybe those are a little bit more of like meme brands, but yeah, I think you can reinvent yourself in Web3. It's a new audience to some extent.
Let's move on, Jeff. Let's talk about Roblox. We're going to talk about Roblox and Unity, call it back to back here. Both had their earnings calls for this quarter, and some interesting takeaways here. I think there may be some interesting discussion to go through. So let's start with Roblox. And, there was a whole shareholder letter, which we don't, it's a half-hour podcast, so we don't have the time to get that deep into that shareholder letter. But this CNBC article has a bit of a summary. So the headline here, Roblox shares sink on disappointing revenue and wider than expected loss. Roblox reported fewer users in the quarter than analysts had expected, and bookings dropped from a year earlier. The company, which generates revenue from purchases of its Robux virtual currency, has suffered along the rest of the tech industry. So just a bit of a recap here. They had a loss of 27 cents a share versus 21 cents, which was expected by the analysts. Revenue 631.2 million versus 645 million. So a little bit of a miss there. Bookings declined by 3% in the quarter. So a little bit of a cooling from the pandemic is what the CNBC article is saying here. And the daily active users, though, are up. And they're up 28% from a year earlier. The only problem was the street was expecting 55 million DAUs, and Roblox reported 54.1 million. Users spent 11.8 billion hours engaged in Roblox, and the average booking per daily active user slid 25% to $11.67. So more users, not as many as expected, but they're spending a little bit less than they used to.
Yep.
And so revenue missed a little bit and earnings missed a little bit. What do you make of the overall Roblox picture here, Jeff? And do you think there's a bit of an overreaction, or general market sentiment's bad, so Roblox is a victim? Or do you think, does anything in these numbers scare you?
I mean, number one, definitely there is a bit of, the market sentiment has completely shifted. And obviously this is a business podcast, but we're not, going too deep into stock analysis. But the macro picture right now is pretty bleak, and the whole market is kind of selling off, particularly these large cap like growth tech stocks. So it makes sense that any hiccup you're going to get punished. I do think the interesting piece here is around the bookings declining year over year is not great. Like, because even if growth is slowing, like, it's pretty bad. And I understand it's tough comps and you had COVID last year, but shrinking, like, as a business is not great when you're trading as a premium brand at a premium multiple. So that's a little surprising. And then this stat around like the time spent per user shrinking is actually probably the most,
the dollar
I would
spent,
say, alarm. But I think there was also, so it might not have said it in this, the time spent per daily active user was down on average. So that's probably the most alarming piece. And, they did say, hey, it was slowed down because, it probably was because last year was a little bit more, COVID lockdown versus this kind of spring. I don't know. Do you buy that? Like, that to me is a little bit of an alarming picture, because you could blame COVID, but you could also say, hey, people are moving on to other metaverses. People are moving on, aging up out of the platform. Like, that's an alarming stat that usage per person is dropping.
I mean, but the daily active users are growing. Now, they missed analysts' expectations, but there was still growth, and 28% year over year is not like anything to sneeze at. They grew an average of 46% annually. Now, is growth potentially slowing? Yes, but you're also now have a user base that is pretty large. I mean, the simplest question I have to come back to your question, Jeff, I'll answer your question with the question is, market cap of Roblox today is 14 billion. I just looked it up, right? We know Epic just raised a round at 30 plus billion. Right, 31.5 billion, I think, was the $2 billion round they just did. Is Epic worth 2 Robloxes?
Well, it's funny that you're posing it that way, because I feel like a month or two ago we were having the exact same conversation, but the opposite, where it was like, well, Roblox is worth 58 billion and like Epic is worth 20. Like, does that make sense? And like, no, I mean, the answer is they're probably pretty similar. That's the benefit and the negative of being on the public market, where every day your sort of valuation fluctuates. Good on Epic to have closed that, $2 billion round like a month ago, which doesn't seem like a lot of time, but the markets have really shifted. So good on them to get that money. Yeah, they probably should be about the same valuation. It's probably overshot on the downside at this point, but I think investors are going to want to see those metrics kind of reaccelerate, where if bookings are declining and time spent on the platform is declining, even though, users are still growing, like, that's not great. And I think I saw somewhere in here that like users particularly in North America, like, I think daily active users may have even been like flat to down. So they're growing in other regions, which is great. That's a big initiative for them to grow internationally. But those people are obviously not monetizing as much. So investors will look for signs that they can monetize those international users. And if they start doing that, you'll see the stock, I'm sure, start to go higher again.
Yeah, I think the one thing that I find encouraging from the whole Roblox story is their story hasn't really changed, right? Like they've not said one thing and then 6 months later said another thing, right? They seem pretty focused on what they want to achieve. I just did a quick search through their shareholder letter, right? There's 5 mentions of the word metaverse in a 12-page letter, right? And where they mention it, I think makes sense, right? That they talk about, and I think maybe the most exciting place, I'll just read this sentence. And this is where I sort of get excited for the long-term opportunity for Roblox. They're not just thinking about user growth, they're thinking about monetization, they're thinking about, every angle of building out this metaverse. They said beyond sponsored ads, we're at the beginning stages of developing native and immersive advertising in the Roblox metaverse. We envision several new advertising units that we imagine as being complementary to our user experience. That, I think, is in and of itself is maybe one of the most interesting things from this whole story, because so far, all of the advertising we've seen in any metaverse is like slap a logo or like a banner essentially in the virtual world in the same way you may have a digital sign on the highway in the real world, right? Like there's not much innovation that has happened there. And if Roblox sort of figures that out, unlocks that could be really massive, right? Like that could be pretty consequential for the entire metaverse story.
100% agree. And it's not really something that I think investors had really baked a ton into in their projections. Like they were probably more thinking in terms of user monetization, like in-app purchasing avatars, purchasing skins. If they can really unlock like an advertising side of the business and make that, 20 or 30% of revenue, that would be kind of game changing. Funny enough, my one of my impressions, for whatever reason, and maybe it's just having heard Roblox talk a lot and listened to their investor days and stuff in the past, I almost was alarmed by the focus on monetization a little bit. And I'm putting my tinfoil hat on. Like, it almost felt to me like what's like the Shakespeare thing, like the lady doth protest too much. Like, because historically their line has always been like, look, we're about user growth, we're about experience, the platform. Like, we don't care about like people will monetize, but like we're not trying to like turn them over and shake the coins out of their pockets. And the fact that they made like half the shareholder letter about like, look at all these ways we can like, don't worry, Wall Street, like we're gonna monetize, almost made me like feel like that, like worse about it as an investor.
Interesting. That is, I kind of like that tinfoil hat theory. Well, I mean, it makes sense, right? It could be the distraction, like, hey, don't worry, like that it's slowing here because we're gonna figure out how to squeeze more out of what we've got.
Right, like in inning 2 or like inning 1 of what we think is like this. You're on record saying they're going to have more, users than Twitter in however many years our bet is. Like, we're expecting them to get to 200-300 million, daily, monthly active players. I think they're at 50. So if they're starting to say, hey, like it's all about monetization now, like that as a long-term investor would probably worry me. Just maybe reading between the lines a little bit. And maybe they're just putting some of this stuff in there because they see the market and every stock's getting killed, right now in growth plans. So maybe they want to play up the monetization side. But a little something in my head kind of just like made my alarm bells go off a little bit.
I wonder what is hampering the user growth at Roblox. Like, why is it not growing, 50% a quarter? And I'm exaggerating, but like, what is stopping the growth at Roblox, or what is slowing the growth at Roblox? Is it an inability to break out of their age range? Is it not enough novel experiences built by developers? Is it not enough awareness? Because Roblox truly doesn't have the same presence of mind or mind share in the mainstream community as like a Minecraft or a Fortnite.
I think it is the latter. I'd be curious to know how they're advertising, like where, clearly kids are finding this. Like whenever I'm with my cousins and stuff, they're always talking, like I'm always surprised that they are playing and talking about Roblox, but it's not like you see ads on TV or like if you watch cartoons with your kid on the week. It's not like you see a Roblox ad. So I'm not sure how they're actually targeting these kids, which is a
And
weird thing to say, targeting these kids. But I'm not sure how they're getting their name out there.
yeah, that may be the issue. Let's switch over here to Unity, because Unity also had a bit of a problematic quarter. And the headline here, so this is from Market Watch. The headline here says Unity software stock plunges nearly 30% on weak revenue guidance. So this is on Tuesday of like if you're listening to this on Monday when this comes out, this would have been Tuesday of last week. And so they reported first quarter results largely in line with Wall Street forecasts. They reported a net loss of 177 million compared with 107.5 million in the year ago quarter. So they're losing more money than they did a year ago in the same quarter. But revenue increased 36%, which is not insignificant. And Unity said that Q2 revenue should be between 290 and 295 million, while analysts anticipated 360 million. So it seems like the analysts are expecting faster growth than the company believes they can achieve. And again, are there any alarm bells for you here? Or is it just market softness?
I think it's a bit of market softness again. This story I'm a little less in tune with than the Roblox story, because Unity is more of it's a B2B software company. So even though it is a gaming company, it really trades like a SaaS company. So as I understand it, the quick take is that Unity has sort of two sides to the business. One side is the SaaS business where, if you're a developer on Unity, you pay them, on a per seat basis for a subscription. And then the other side is really almost like an ad network, and they have a bunch of stuff that helps these developers then monetize their game, and that's paid for on like a per usage basis. So I think there was an issue on that side of the business, like the ad piece, and it had something to do with the Apple changes that have gone into effect in the last year. Basically, there was some change that caused them to have the growth be slower, and so I think that was a big piece. And then they talked a lot about in the call how it's going to take them a few quarters to like ramp back up to the same growth on that side of the business. So yeah, I mean it's interesting. I will just full disclosure, I bought some stock today in Unity for my PA. It just seemed like the stock has had such a fall from where I think it was over $200 like a few months ago, and I just see how
down
valuable
85% in the last 6 months.
So I just see how valuable Unity is in terms of an engine. Like I know you spoke at the top about Unreal Engine, and we were talking about immersive worlds and stuff like that. Unreal is the number one engine, the one to go with. But when you're talking about mobile gaming, I mean, Unity's market share is massive. It's well over 50%. And they're doing a lot in terms of metaverse, Web3. Like a lot of the gaming companies that are building Web3 games are building them on Unity. So I think it's a pretty strategic asset. And I think it's like a $9 billion company now. Yep. With the growth of gaming and just still the popularity of mobile gaming, throw in Web3. I think it's too cheap.
I want to key in on something you said here, because Unity has market share very similar to Unreal, right? And in some ways on mobile, they're stronger, but very similar, like pretty apples to apples comparison between Unity and Unreal Engine when it comes to sort of market share, size, scope, who it reaches, et cetera. And you're right, a lot of Web3 developers are building on Unity. What I find interesting, and this is totally anecdotal, I rarely see any articles or any kind of press or any kind of communication from Unity talking about Metaverse, Web3, like almost nothing. That they have not tied themselves to that horse at all, whereas Epic very much has, right? Epic talks about it quite frequently in Unreal Engine in that context. And I wonder if part of it is just they haven't done a good job of communicating sort of what they are doing in that space, in this space.
I think that's a fair point. It's funny you say that because right before we were taping, I had Mad Money. This has become like the finance episode, which is funny. But I was watching Jim Cramer, like Mad Money on CNBC, and John Riccitiello was on being interviewed. and he actually said something around metaverse, like basically like, that's become a buzzword. Like we don't even think about, like we don't talk about that. Like we're like building. Like, he kind of like said we're doing all these things, but was like the metaverse has become a buzzword. Like here's what we're like. We have 70% market share on mobile. Like, he kind of like was like, this is the tangible stuff we're doing. Like all this metaverse stuff is just a distraction. So it's funny that you said that. It seemed like almost it's like part of like a conscious decision not to hype up the metaverse speech, which if we were talking 3 months ago would have been negative, but now it seems like maybe that's a good strategy. So.
Yeah, it feels like a bit of a miss, right? And when your stock's down 85% in the last 6 months, maybe that's not the hill to die on, right? Like maybe seen worse hills to die on, but that one's not a good one either. All right, let's get to our last story here. We have an interesting one here. This is news from VentureBeat. The headline here is Irreverent Labs confirms $40 million round funded by Andreessen Horowitz and others. So this is talking about Irreverent Labs. They're a Web3 game developer. They've confirmed that they've raised $40 million to create Mecha Fight Club, a robot cockfighting game that uses NFTs. This is the founder here was the founder of Voodoo PC, who I think they sold to, I want to say HP, I think, or Dell. Dell or HP bought them.
Rahul Sood was also the founder of Unicorn, which is odd that they didn't list that, because they were the esports betting company that was backed by Mark Cuban and had a lot of success, and then had a lot of failure, but then was recently sold to Entain, which is a massive gambling company.
So it's a play to earn game. The Mecha Fight Clubs, I'll read this from the article. Mecha Fight Club's chickens are mecha bots with NFTs, which use the blockchain to verify the uniqueness of each chicken. It's play to earn. Players can own the characters that they buy and profit from if they can resell them to someone else once they're leveled up. While cockfighting is controversial, it's popular in Asia, and the creators are aware that the people are concerned about the cruelty of the real-world sport, and so the developers are emphasizing humorous combat, not gory realism. So you'll collect, train, and battle combat robots. Sounds a little bit like Pokemon, to be honest. Yeah. And each mechabot has unique styles, abilities, preferences, etc. So big round, $40 million for cockfighting.
I mean, if you had read that story to me a year and a half ago with nothing, like, I wouldn't have believed a single word.
I feel like you've said
NFTs,
this before.
Play to earn, like a virtual digital cockfight where you earn money by fighting your cocks. Like, it's crazy. But the craziest part actually of all of this is, like, we've really crossed the Rubicon in terms of Andreessen Horowitz backing something like a content play like this. Like, for the longest time, I mean, gaming was really shunned at large VCs because it was, hey, it's too hit driven, it's it's cyclical, blah 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 blah. There's too much risk in the content cycles. And if they were even going to look at or touch gaming, it was, hey, we're interested in platforms, we're interested in tools and technology, kind of picks and shovels plays. The fact that we're now seeing a venerable VC firm like Andreessen Horowitz investing in this, which, I mean, good for them. Wish them a lot of success. They clearly, founders have a track record of exits, so that's probably what Andreessen's betting on. But this is a pure content play. If the game doesn't work, the money's gone. Like, there is no backup plan. So yeah, I mean, it's surprising. I don't know if, as a VC, if you have any thoughts on that.
I mean, this has to be all about the founder, right? Like, I have to believe that this is essentially almost like a favor, because I just feel like there's a lot of risk here. First of all, just in the nature of the content, right? And I get maybe it's an Asia play, where I firmly believe that play to earn is probably only going to survive in developing countries, not in North America. So maybe the whole cockfighting like subject matter is fine then. But I can see how this gets backlash in a place like the US, where people are a lot more sensitive to these things and are much more vocal about these things. So I'm not 100% sure where the innovation is coming from. Like, what justifies a $40 million investment in something that is no different than just about any other fighting game, other than the fact that it's an NFT, right? Like that you've integrated NFTs. And I think that's where the blockage for me is. It's, where is the 10x, 100x kind of return if we believe unless you believe the economics of adding in the NFTs changes the game so drastically, this is a hard one to get my head around. And I'm just skeptical that anyone will care to play this beyond like a bit of a meme thing that some streamer will do for like an hour, and then there's not much to it, right? Like this really has to be the next Pokemon to justify a $40 million investment. That's the way I think about it, right? It has to be the next Pokemon. And I don't know if, the same way I buy Pokemon cards for my 5-year-old nephew, will I go buy him, Mecha, Cock, whatever? Like, I don't know. I don't think so. And so it just seems disconnected from the size of the investment. If this was like 4 million and it's a flyer and, you want to test out something fun and you're investing in 50 of these, I guess with Andreessen, they can invest in 50 of these and they can still put this amount of money. And so the economics may be different, but I just don't see it. I mean, they say the Discord community has 25,000 fans. I mean, hey, our like Meta TV, our parent has a Discord community about the same size, right? Like this is not, World of Warcraft, Counter-Strike level of interest.
Right. Assume that even, I think 10% of those people, getting 10% of those people to actually download and play the game would be probably a massive success. Think about how much money they'd have to spend to even come close to justifying anything near this $40 million raise. So it'll be interesting to follow.
It'll be interesting to follow. And, I would be curious to see long-term how many of these plays Andreessen puts in their fund, for example, right? Is it 5? Is it 10? Is it 25 bets? Like, I can't wait to see sort of the overall picture become clear in terms of their thesis. So, Jeff, that wraps up this week's podcast. Flew by. As always, guys, make sure to subscribe, leave a review, go follow the Juice on Twitter at Jeff Cohen 23. Instead of following Mecha Fight Club, whatever, go follow Jeff Cohen 23 on Twitter. Also, make sure share the podcast with your friends, with your colleagues, anyone you know operating in this industry. Put it on your LinkedIn. Get people talking about it. We really appreciate it. Don't forget, the future is fun, guys. We'll see you next week.
Thanks for joining us here on Meta Business. Make sure to subscribe to this podcast everywhere you get your podcasts, leave a 5-star review, and tell your friends, family, and colleagues all about us. Also, make sure to follow Meta TV on all socials to get more of the best metaverse content anywhere. Tune in every week for another episode of Meta Business.